Welcome to the Wall Street Lab podcast, where we interview top financial professionals and deconstruct their practices to give you an insider look into the world of finance.
I think the business has changed a lot actually in the last 2 to 3 years. And while everybody kind of keeps on operating, in a typical usual way that we do things, but certain teams started emerging slowly, which are probably too small to be noticed if you're not in this area, but which are slowly coming up to the surface, which might be actually be quite interesting in terms of seeing how the industry will change and develop. I mean, first of all, if you look through the pandemic, we're not flying anymore. I think that's what you and I started the conversation originally. Any deal, whether it's a Eurobond or it was an IPO follow-on offering, required extensive marketing, and that marketing was extremely extensive and burdensome in terms of the travel, because you had to go to so many countries. I mean, a typical road show is about 2 weeks, and you would have two different teams on the road, and one team would fly east and the other team would fly west, and then you meet somewhere in between, and you would have 6, 7 meetings per day, one by one, cars, travels, airports, airplanes. The pandemic has changed this completely. With Zoom and Skype or whatever other means we have available, the marketing has become much more efficient in that way. And I don't think we're going to go back to the old way of traveling and meeting that we used to do. So that changed for sure. This is here to stay, and I'm not sure anybody's going to go and torture themselves physically in terms of the amount of travel that we have to do, even though I do miss it. But one of the things I did notice is, depending on, especially in 2020 and 2021, because of the technology stocks coming up, and because of the technology companies majority being listed in the last 2 years, something that emerged in the States but hasn't emerged in Europe and is not even in emerging markets, because emerging markets are lagging so much behind what's happening in the developed world, is, let's say, the introduction of direct listing on NASDAQ. You don't have to do the whole, prospectus writing, road shows, price discoveries, whatever we've just talked in the last 30 minutes. You can skip all that and do a direct listing. It's only available in certain situations if you can't use that to raise new capital into the company. You can only use that if it's the current shareholders that are selling a little bit. So they decide on the price together with the investment banks, and they just do a direct listing and say, here's $20, take it or leave it. This is the first price that I'm going to start trading with. And direct listings, came from the technological sector. Very widely used in the United States right now, but not used anywhere else as widely as there. Another notion that came this year, and it started in 2020 and came this year, is, again, coming back to our discussion, what is the fair value, is the hybrid auction that were introduced in the States again, where your book building is now taking a form of an auction rather than the investment banks typically giving a range during the IPOs as to where is the pricing level for a certain company. There is, new introductions of such things as, when you do an IPO, for example, people are typically locked up, management companies are typically locked up for 180 days and can't sell their stock. And that was brought up again because, they saw that those who were with the business for quite a long time, didn't have the ability to participate in this pop in the price. If you priced it well and your stock goes up, you were locked for 180 days. You couldn't sell your stock. You couldn't do anything. You couldn't ride that wave and benefit from it because the banks have put a lock on you for 180 days. So there was so many different things that were, appearing and changing that, again, it's very local to the United States, but I'm paying a lot of attention to it because I want to see how this is going to move, whether this is going to be, embraced in Europe, whether it's going to embrace in Russia or, in the wider emerging markets in terms of all those innovations that are coming in. It is being only currently tested. Or the other thing, SPACs. I mean, SPACs, I think everybody spoke about a SPAC. I mean, I've done my first SPAC. Well, I've done the first SPAC out of Kazakhstan, literally this September. So I had to dive into this. SPACs have been for the last 20 years, 2020, 2021, and the States was the SPAC year. Obviously, SEC is now looking into all this regulation. I mean, look what's happening in Europe. Amsterdam Stock Exchange has become the SPAC place in Europe. If you want to do a SPAC, you do to Amsterdam. London Stock Exchange suddenly completely reviewed and revised and rechanged their rules in August to get SPACs into United Kingdom. Singapore is changing their regulation in order to get SPACs changed. Somehow this kind of moved and became global in terms of, SPAC frenzy. But then there's also little developments that are happening which are not, as immensely embraced by everybody else, but they're quite interesting to see how they will evolve, because things as auction style book building, things like direct listings, they change the base and the fundamentals of what an investment bank is and what service it offers. So if that becomes much more widely used, I think the whole notion of an investment bank and what services provides will change. But we're not there yet.